3 red trades in a row. You feel it. Your confidence starts to shake. The system you trusted suddenly feels broken. And somewhere in the back of your mind, a question whispers, do I even belong in the markets at all? But pause for a second. What if the problem isn't your strategy? What if it isn't even the market? What if the real battle is happening in your psychology? Here's the truth, losing streaks aren't rare. They're universal. Every trader faces them. What separates the professionals from the broken isn't who avoids streaks. It's who prevents them from spiraling out of control. And that's where your edge truly begins. The first thing you need to know is this: losing streaks happen to everyone. It doesn't matter if you're a rookie with a few weeks of screen time or a professional who's been trading for decades. The truth is, no one is immune. Even the traders you see on social media posting massive wins, they've tasted losing streaks too. They just don't show you that part. Why do they happen? Because markets are living, breathing systems. They shift. They evolve. What worked perfectly in a trending market might stumble in a choppy, sideways range. A strategy that thrived in low volatility might fall apart the moment volatility spikes. So when you hit a streak of red trades, it doesn't automatically mean your strategy is broken. It doesn't automatically mean you're broken. More often than not, it simply means conditions have changed faster than you've adapted. And here's the psychological twist. We take these streaks personally. Instead of seeing them as part of the game, we attach them to our identity. I'm a bad trader. I don't belong here. That self-judgment is the fuel that turns a normal losing streak into a dangerous spiral. The reality is simple. Streaks are inevitable. But the spiral? That's optional. So if losing streaks are inevitable, why do they feel so destructive? Because it's not just the market working against us. It's the traps our own minds set. The first one is revenge trading. You take a loss, and instantly, the urge rises, I'll get it back on the next one. But here's the danger: revenge isn't a strategy. It's emotion disguised as confidence. And 9 times out of 10, it just digs the hole deeper. Then there's overconfidence. A few wins in a row, and suddenly you feel untouchable. You take bigger risks, ignore your own rules, and before you know it, those wins vanish, replaced by losses you never planned for. Another trap? Loss aversion. This is where we hold onto bad trades far longer than we should, refusing to cut them. Deep down, it's not even about the money, it's about refusing to admit we were wrong. And the longer we hold, the more the market punishes us. And then comes the most dangerous one of all, ego attachment. This is where trading stops being about trades and starts being about identity. Every red candle feels like a personal attack. Every losing position feels like an insult. You're no longer trading the market, you're trading your self-worth. These traps, they don't just make a losing streak worse. They create the losing streak. One bad trade becomes 2, 2 becomes 5, and suddenly you're spiraling, not because your strategy failed, but because your psychology took the wheel. Here's where things really unravel. A single loss? You can handle that. 2 in a row? Still manageable. But once those losses start stacking, something shifts inside you. It's no longer about the market, it's about your emotions. Fear creeps in. Anger follows. Desperation takes the driver's seat. And now, instead of trading with clarity, you're trading in survival mode. That's when cognitive biases slip in like thieves in the night. Confirmation bias whispers. See? This setup still looks good. If I just hold, it'll turn around. You start searching for any sign that proves your decision wasn't wrong. Then comes the sunk cost fallacy. The thought that because you've already lost so much, you need to stick with the trade or double down just to justify the pain you've already endured. And let's not forget the illusion of control. That little voice saying, if I just watch the screen harder, if I just will it enough, I can force the trade to work. But the market doesn't bend to our will, it doesn't even notice us. This is the spiral, losses triggering emotions. Emotions fueling bad decisions. Bad decisions are creating more losses. A cycle that tightens around you like quicksand. The harder you fight, the deeper you sink. And here's the cruelest part. Most traders don't even realize they're trapped in this spiral until it's too late. So how do you stop the spiral? The answer isn't trying to avoid losing streaks, because you can't. The answer is adaptation. Think about it. A pilot doesn't quit flying because of turbulence. A sailor doesn't curse the ocean when the wind changes. They adjust. They adapt. That's how they survive the journey. Trading is no different. Losing streaks often don't mean your strategy is broken. They mean the environment has shifted. Maybe the market has gone from trending to choppy. Maybe volatility has dried up or exploded out of nowhere. The market is alive. It changes every day. And here's the trap. Sticking to your plan blindly, refusing to adjust, can be just as dangerous as having no plan at all. The best traders don't just have rules, they have flexibility built into those rules. Adaptation can look like this: reducing your position size when uncertainty spikes, pausing after a set number of losses, giving yourself room to reset, recalibrating stops and targets to match current volatility. Or sometimes, the wisest choice of all, not trading at all until the storm passes. Adaptation doesn't mean abandoning discipline. It means staying disciplined enough to recognize when the battlefield has changed. Because here's the truth. Streaks don't destroy traders. Inflexibility does. The moment you learn to bend with the market instead of fighting it, that's the moment losing streaks lose their power over you. Now, adaptation is the philosophy. But what about the day-to-day actions? The things you can actually do to stop a streak from snowballing? That's where countermeasures come in. The first is what I call the stop rule. Decide in advance how many losses you'll allow yourself before you step away. 2, 3, whatever your threshold is. Once you hit it, shut it down. Because discipline in stopping is just as important as discipline in entering a trade. Next, detachment rituals. When emotions are running hot, you need distance. Step away from the charts. Walk, breathe, journal. Even something simple like writing down how you feel can stop that emotion from hijacking your next trade. Then comes trade journaling. Not just tracking your entries and exits, but documenting your emotions alongside them. You'll start to see patterns. Maybe you trade worse when you're tired, or when you're overconfident after a big win. Awareness is a weapon. Another countermeasure? Process over outcome. Measure success not by whether the trade was green or red, but by whether you followed your rules. Did you respect your stop loss? Did you stick to your risk percentage? That's progress, even if the trade itself lost. And finally, embrace probabilistic thinking. Every strategy has losing phases. Even the best setups will sometimes fail. That doesn't mean you're failing. It means you're playing a game of probabilities, and streaks are part of the math. When you anchor yourself to these countermeasures, you strip streaks of their emotional bite. They stop being storms that sweep you away and become just passing weather. Here's the bigger picture. You can have the best stop rules, the cleanest strategy, and the sharpest tools, but if you don't have resilience, the market will still break you. Resilience is the trader's real edge. It's the ability to take the hit, reset, and come back clear-headed. Because streaks aren't just about trades. They test your patience, your discipline, and your identity. So how do you build that resilience? Start by expecting streaks. Don't treat them as a sign of failure. Treat them as a normal part of the journey. When you accept that losses are built into the game, they stop feeling like personal attacks. Then, develop habits outside of trading that keep your mind sharp. Journaling isn't just for your trades. It's for your emotions, too. Meditation, exercise, even just walking without your phone. All of these build emotional control. And that control will pay dividends the next time the market tilts against you. Professional traders understand this deeply. They don't avoid losing streaks, they cap them. They know the line between a temporary drawdown and a catastrophic blowup is their ability to pause, adjust, and return stronger. Think of it like a boxer. Even the greatest champions take punches. The difference is, they don't let those punches shake their belief in themselves. They take the hit, guard up, and stay in the fight. That's resilience. And in trading, it's the difference between burning out in frustration and building a career that lasts. So let's bring this full circle. 3 red trades, confidence shaking, that whisper of doubt creeping in. Every trader knows that moment, and every trader faces it more than once. But here's the truth. Losing streaks will always come. They are not a verdict on your ability. They are not proof that you don't belong. They're simply a test of your adaptability, your discipline, and your resilience. The streak isn't in the market. The streak is in your mind. And the moment you understand that, you stop fearing losses and start controlling the spiral. Because the real goal isn't to avoid every losing streak. That's impossible. The real goal is to prevent those streaks from controlling you. So the next time you hit a rough patch, remember this. Adapt. Reset. Stay disciplined. The market doesn't reward the trader who never loses. It rewards the trader who refuses to break. And that's the psychology of avoiding losing streaks.